Hi everyone, welcome to this morning's London Forex webinar. Lovely to have so many of us join us today. It's actually gorgeous down here on we actually live on the South Downs down in Hampshire, so we're very lucky, very privileged. And I know those of you who are Forex program students will have seen me put a little photo of us taking the dog for a walk, or rather the dog was in the dog buggy and we were walking because he's getting a bit old, and so he can do half of the journey but can't make it home under his own steam. Anyway, wherever you are in the world, I hope you're well. I hope you're all coping okay with the health crisis that we've got at the moment. And it's, as I said, it's lovely to have you and welcome you here with us today. At least it's takes our mind off a little bit of the awful things that are happening out in the world. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a risky business, so please don't ever use money that you cannot afford to lose. I'm actually going to whiz through very quickly. Where am I? Here we are. Those of you who haven't come along before, what we do in these sessions, we look at the Forex market using a methodology that David and I have been using for 20 odd years now, which is volume price analysis. The details are all in the books that you can find on Amazon. But with Forex, in fact with all markets, but particularly with Forex, we don't just look at the technical picture, the charts, obviously very important. We also look at what's happening on the fundamental landscapes, but also what is happening in the related markets. All markets are actually fundamental. They're all connected in some way. What we're looking at all the time is where is the money flowing. It's about money flow, and that money flows depending on what the sentiment is in the broader market, and in the economy, and what is happening around us. Now, clearly, the crisis that we've had with the virus has meant that risky assets such as equities have sold off very heavily. We've had an almighty market crash. How is that reflected in the currency and currency markets? Well, there are individual currency and currency pairs which reflect that sentiment, and they will rise and fall accordingly. So not only do we look at the technical picture, which we do through the prism of volume price analysis, and the easiest way to explain that to you and Wyckoff's 3 laws is to actually look at some charts, but we then it also helps we look at what the sentiment is. And the way we look at sentiment is we go over to something like investing.com, and we see, well, what has been happening overnight, and we can see the Nasdaq is up. It's up very strongly, 119.3. We've got the S&P up, that's 34. What is the VIX doing? The VIX is it's actually an index which records the puts and calls in the futures market for the S&P 500, and it works in an inverse. It has an inverse relationship with the S&P. S&P. In other words, when the S&P is rising and sentiment is positive, the VIX will fall, and when the S&P and the market generally is in free fall, as we have seen, the S&P the VIX will rise. And we've had some really scary numbers with the VIX. I think it even went up to about, did it get to 90, David? That's no, it didn't quite get to 90. 90 is the number that it got to in the 2000. The last time we had one of these market events at the time of what they call the Great Financial Crisis. So that's what so immediately that gives us a sense of what kind of mood is the market in at the moment? Is it a good mood? Is it a bad mood? Is it a positive? Is it a negative mood? And that's going to be reflected in the Forex, in the individual currencies and currency pairs. Now, what I've also done, and this is something I was going to suggest, because what we also do in this session is, as well as volume price analysis, which is detailed in the books, and I said that are on Amazon, David and I have developed some very particular indicators, both for the Forex market and to help us with the methodology. These are the Forex specific indicators that we can see here. This is my version of my currency dashboard. I am missing, I haven't got here on my screen, which is the heat map, which I will bring up later. But essentially what these indicators tell us is where has the money been flowing to in the sense of individual currencies. Where is it at the moment? What are the individual currencies and currency pairs doing at the moment? and looking at the indicators. What are they telling us in terms of where it is likely to be going next, as it were? And it just gives us, it avoids the necessity of looking at 28 pairs. Imagine if you had to do this over 28 pairs, it would take you forever. So this is what we're seeing at the moment. Now, those, I know some of you come along who have the program, some of you just have the indicators, others perhaps this is your first time here. So I'm just going to quickly tell you what you can do with having a dashboard or these indicators, what they will do for you. And it's not something I've suggested before, and so you may like to consider this if you have the indicators, and that is at the close of your session, of your trading session. It could be the close of the US session, but whenever you decide to close out, you know, you're going to move away from your terminal, is actually take a screenshot, which I did yesterday, which is actually the what time was it? It was about sort of 6, 7 o'clock. And it was for a post I actually did on my Learn Forex trading page. But what it tells you, and the post was specifically to highlight that we had some important fundamental news today, which has come out of China and Australia. And it's also the beginning of earnings season in the United States. I mean, while this crisis has been going on, fundamental news has been coming out, and it will continue to come out, and it will now begin to reflect the carnage that has been visited on the global economy. But this was what this is how I, you know, this is the screenshot from last night. And what this tells us quite clearly is, as we can see here, we've got the Aussie, which had been actually rising very nicely. And in fact, yesterday was a really nice trade on the Euro Aussie on a day that there's a public holiday here in the UK and in part in Europe as well. So the markets, there was not a lot of liquidity yesterday. So if you were trading yesterday, you may have found a lot of spiky price action, and it's simply because we didn't have the full quota of participants in the markets. But it's a very interesting. I use the hourly chart. Because I find that it's just easier to, there's enough in there to tell me what has happened, where we are, and potentially what is going to happen next. And what caught my eye, as you can see here, we can see the Aussie. It's at the top. We can see down here we've got the euro. We've got this. We've got the Swiss. It tells its own story. And then when you come this morning and you say, well, that's what it was yesterday, and because we all forget, we can go look at it and say, oh yeah, well it was here, and you can put your cursor over and say, oh, that's where it was, at 8 o'clock yesterday afternoon. But in all honesty, without having a screenshot, it takes a second. Just put it up there. You can annotate it. You can do this with charts as well, and it's a very quick way of seeing what it was doing, and also look at what the individual currencies what currency pairs were doing. But looking at the hourly CSI, it's clear that the Aussie was at the top, was overextended, and the euro and the Swiss. And as I said, a really nice trade was on the euro Aussie yesterday. Right, that tells us that. What it also tells us is how does that compare with what we can see today? Well, this is where it was yesterday compared to the photo, and it sold off a bit, then it's coming back, and then it went back up, and now it looks as though it's selling off. What it also tells us about when currencies and markets become overextended is that they can roll over. You can see that possibly there is a reversal, and then it will simply, if you like, that is the primary trend higher for the Aussie. Then we had a reversal, if you like, a secondary trend, and then it went back up, and now it looks like it's going to roll over. Markets don't go up and down all the time. Now, what VPA will do for you is when you are looking at a pair that is in a potential for a reversal, and you're not sure whether it's going to be from a primary to a primary, and you get these secondary pullbacks, are the pullbacks just a pullback, or are they actually the start of a reversal? Because you see there, you say, oh yeah, that looks great, that looks great. In fact, that may have been tradable. That's not to say that isn't a potential trade there, but it didn't. It went back up, and now it looks like it's going to be rolling over. What's happened to the euro down here? Well, the euro's had a very, as you can see here from these lines, what these lines do is when they are very jagged like this, or you know, they're not smooth, well, it tells you that the movement in the euro, there's flows into the euro, then they come out, then they go back in, and they come out. This is all about money flow, and what we're trying to find is to identify that money flow into the individual currency, and then from that, the best pair to trade, the best is it's going to offer the best trading opportunity. And what we'd like to see is we'd really like to see these lines smooth. We see here the pound is being bought at the moment. So you say, oh, so this is how you look at your, this is how you do the analysis first. From there, you then go and see, well, what is, looking at the pound, just seeing that it's rising here, or has been rising. Okay, well, that's rising. Then I can go over here to the matrix, and matrix is like a scanner. It scans the pairs, and then I just flick on the pound. Oh yeah, well, that's the buying that I've seen in the pound. Well, where has that been strongly reflected? And you can see them. What this indicator does, it then ranks them. So we've got it's obviously been bought against the yen. We've got against the Canadian. The Canadian doesn't look as though it's doing very much, but that pair may be driven more by pound buying than Canadian selling. And we've got cable. So what's cable doing? Well, the dollar has actually been rising, but so has the pound, and it looks as though that move is more in pound buying than in dollar selling. One of the things about Forex is that it's a question I had from one of our students, and this is, it easier to go and trade a single instrument such as an index or a commodity? And the answer, in some ways, it's not easier, it's more straightforward, because all you're looking at is, if you're trading gold, all you're looking at is gold. You might look at what the dollar is doing. You certainly pay attention to what is going on in the broader market, because gold is a you know, it's a safe haven. It's linked to sentiment and etc. etc. But you're not trading gold against silver. You're not saying, well, gold is going up and silver's going down, although gold and silver go in the same direction. Let's put a better example. You're not trading gold against wheat. You know, you haven't paired them together. They are two commodities. You're just focused on gold. With Forex, you have to look at the individual currency first, then the pairs, and what is driving that particular pair. So as we see here with the pound is going up, and we've got cable going up, but that driver for that pound is much more a case of the pound driving the pair, because the dollar is also going up. You think, well, okay, well, if the dollar's going up, let me just go and see what the dollar is doing. So quickly, here we are. Right, well, where's the dollar? The dollar's now being bought. We can see here, maybe that dollar buying, that's going to shift, if you like, in cable as well. But actually, if we look at, this is the New Zealand dollar, and that's clearly evident on the CSI. You've got New Zealand falling, and you've got the dollar rising. This indicator over here is actually on the 15-minute version. This is actually the pairs from a sense of momentum. It's just saying, well, exactly that. It's, you know, which of the pairs are actually, you know, moving in terms of strength and momentum. And we can actually see here the cable, and we'll look at cable later. And it's also reflecting that this line is very strong, it's very straight, and we can see that the driver in cable is actually is for the British pound, rather than a sell of the US dollar. It's complex, it's not complicated, but unless you disassemble it in this way, I believe, and David believes, it's one of the reasons why a lot of traders actually struggle, because they don't understand that this is about money flow. It's about money flow into individual currencies based on sentiment, on what's happening in individual economies. You're looking at pairs, you know, what is happening in one economy against another. Now, everything is obviously being dictated by what is happening on in the health crisis that we have at the moment. But fundamental news is still important, and as I said, this week we've got the earnings season, and today we had the most important piece of news, significant news, and that is the trade balance for China. Now, I have to say about China is all the Chinese data has always been suspect, in the sense that, you know, it's massaged, is it genuine or not? We don't know. I mean, there's a lot of stuff out there. It probably is massaged. But that's not the point. The point is how is the market reacting to the data? You know, we can have all sorts of conspiracy theories, but ultimately it's what is happening on the charts, and that's what you have to focus on. And what is the market? How are other traders reacting to this piece of news? Now, basically, this is the trade balance, and it's the first since the as I said, this crisis has arisen, and whilst it hasn't come in a forecast, which is 175 billion. Essentially, it's the difference between exports and exports. A positive figure means that there's more exports than imports. So it certainly hasn't hit target, which is 175. It's come in at 139, and this is again with data, fundamental data. You read it like a chart, and the market will react to, well, it's not quite as bad as it's not quite as good as it was forecast, but you know what? It's not quite as bad as you know, it hasn't missed the target by that much. So it's very nuanced the way the market reacts to data, and it can be very frustrating because as people and as traders, we want certainty. We say, right, bad data, things go down. Good data, stuff goes up. It doesn't work like that, unfortunately. I wish it did, but it doesn't. If you just flick on that, if you want a breakdown of what that actually means, this is it. This is a breakdown, the actual with the expected, the actual with the expected. I won't go and scroll down to the comments that are underneath because it's full of, you know, as I said, theories about this is rubbish, you know, etc., etc. You'll read all this stuff on the internet. Just focus on what the reaction is from the market. The reaction will be in the Aussie dollar, because the Aussie dollar is very tied to what is happening in China. In fact, the Aussie dollar, the business confidence, this number is absolutely appalling. This is not normally given a red. This red means that it's of high impact, and it is, you know, trade balance is always a high impact. This is not given, it's not considered usually a high impact, but fundamental news, its impact will also depend where we are in the business and economic cycle. Well, given at the moment that the global economy is on its knees, confidence, although this is not generally thought to be a high impact, the market is actually paying attention to this, and it's the extent to which confidence has been destroyed. As you see, there wasn't even a forecast. The previous was -2. It is -66, which is absolutely horrendous. So even though the Chinese data has come in not as bad as was expected, this is absolutely dire. And we'll have a look at a chart, bang, and here we are. And Forex Factory is great actually for these kinds of charts. Right, that's what I wanted to start with. I've actually got some pairs that I've got ongoing on my NinjaTrader, but I'll just pass over to David and see what he's got to say.